Hey, beautiful people, Ryan Hamer here. I hope you guys are doing well. Today, in this video, you're in for a treat. So we're going to be talking about some of the things that you can do to improve your credit that has nothing to do with directly contacting a creditor or the credit bureau. It's actually your own maintenance of your accounts and things of the sort that you have control over. So, we're going to be talking a little bit about credit cards. We're going to be talking a little bit about overdraft protection and pretty much how to pay your bills. How do you pay your bills? So, when it comes to overdraft, a lot of times people get this misconception that it's really easy to get overdraft. No, it is not. Actually, getting overdraft is a lot harder to get than a credit card. It's a lot harder to get than even a line of credit. So let me explain why. Typically, when you go to open up a bank account, you are offered overdraft. You don't have to ask for it. They will offer you overdraft. It depends on several factors. Depends on the bank, and it also depends on your credit profile. We've talked about this previously in other videos regarding how if you have a good credit mix, if you have a good credit score, if you have nothing in collections, that contributes to a healthy credit score that banks, lending institutions love to see. And they're tripping over themselves to offer you stuff once they see a great profile because they know that you are a great risk. They know that you are not a risk, actually. They can count on you. They can bank on you, that you will pay your bills on time, that you will not give them a hassle, and they don't have to run you down. So when you have overdraft, usually overdraft is either 300 to 500 to I've seen even 1,500 or $1,000 in overdraft protection. It really just depends on how much money you have flowing through the account and how much money they think you would need. So typically it starts off at a lower amount of 500, and then maybe it's increased. If they see a lot of money coming through your account, then they might be more opt to increase that amount. However, overdraft is a privilege. It is not a right and it is not a gift. So typically what I hear a lot is, oh, I live in my overdraft. I live in my overdraft. And pretty much, yes, some people do live in their overdraft, but it is a heck of a lot cheaper and safer than a payday loan. So they'll give you that amount in trust for say $500. And when you get paid, that money will go into your bank account and you will be up 500 in addition to your paycheck. But what happens when you use your paycheck for your expenses and this and that over the course of the month, of course, you're going to end up dipping into the negative balance of your overdraft. So what happens is some banks will require you to top up your overdraft to zero. So you have to put that $500 to cover the balance of that overdraft every 60 or 90 days, depends on the institution. What some people do is some people will use their overdraft and then they will make a payment into their bank account and then they will go use it right away. So the problem with that is that you need to at least let the funds sit in that bank account for at least one business day. Once you let the funds sit in the account for that one business day, then you're okay and you can transfer the money out. You can transfer the money and use it accordingly. But a lot of people transfer the money into their overdraft and then use it right away. So a good tip and a good rule of thumb is to let the money sit in your overdraft for at least one business day, and then you can go ahead and use it. I know that, I think, what's it? I know BMO does that, and you guys can leave a message in the comments if you're with another bank and they don't operate that way, then I can make the correction. However, my understanding is a general rule of thumb is banks typically like to at least see that you've paid back that money and can have the money sitting in the account for at least 24 hours, one business day, and then you can go ahead and use it and transfer it around to your other accounts. But overdraft is a great thing to have and it can help you, but you have to use it wisely. It is helpful and handy if you are always going to have if you're going to be, as we say, living in your overdraft, but you have the ability to pay back that overdraft with your paycheck. Always make sure that you have enough to put back in to cover that, because you're gonna have credit cards, you're gonna have car loans, you're gonna have other stuff and everything, and groceries and gas and all that stuff going on. And sometimes your overdraft might be sitting there in the negative for an extended period of time and you may not realize it, especially if it is an account that you don't have your paycheck or what have you going into. So that's definitely something that you need to keep in mind. Also, we're going to talk a bit about credit cards. I'm going to do a longer video about credit cards another time, but you always hear me talk about the minimum payment and why making the minimum payment at the very least is extremely important. Because that's what they've given you, that's on your statement, that's what they've told you. Your minimum payment will be this, and you have X amount of days with which to make that minimum payment. So always make sure that you make that minimum payment. Now, you also want to make sure that your utilization is as low as possible. So 20%, 10%, definitely less than 30% of whatever available credit that you're provided or extended. Always make sure that you use the minimum amount as possible. And that also goes with lines of credit as well. I mean, granted, your interest rates for both products will be, they'll be different. But it's a good rule of thumb to use the least amount of money as possible from that credit that's extended to you. I know it sounds like common sense, but life happens. You're not always able to pay stuff back right away. You're not always able to make the biggest payment back right away, but you got to use these, I'll say, gifts or privileges, if you will. You have to use them sparingly. But I understand things happen, so you might not necessarily be able to pay everything back all at once, but that's okay. That's what interest is for. And make sure that you are always checking to see what your interest rate is. Make sure if there are changes with the prime rate and stuff like that, that may or may not affect your interest rate depending on how you have it locked in, okay? So always take a look to make sure your statement that you're being charged appropriately and accordingly, and just for your own peace of mind. On your credit card, now they have laws where it actually states it will take you X amount of years to pay back this credit card if you only make the minimum payment. Now, I say only make the minimum payment. That's a rule of thumb. That's a basic requirement, but definitely not an exception to the rule. I do not say that you should be only making the minimum payment. So, for example, if your minimum payment is $100, if you can make $150, or if you can make $200 or $300 or $400, whatever you can afford above your minimum payment, that's what you want to do, because it's all about leverage, right? So if it's just the bare minimum that you're meeting, then you're never going to pay down your card at all. So you always want to make sure that you're paying as much as possible onto a credit card if you're truly trying to bring that credit card down. And that is a great segue into the last topic that we're going to be talking about with respect to paying down your debts. So one of the methods that we're going to be talking about today is called the debt snowball method. And just like a snowball, you get a little bit of snow, pack it together, and then you roll it until the small snowball becomes a big, huge mound of snow, and it accumulates. So the whole concept is you go after your smallest debt and you pay that down as best you can. You keep focusing. You throw everything you can at the smallest debt, and then work your way up to, as you finish that, you do the next, and so on and so on and so on, and then work your way up to the biggest debt that you have. And you make the minimum payment for that, and then you add on more to it, and then work your way up to paying that down. The leverage of the extra money that you're adding behind the initial smaller payment, the initial what's required payment, is what's going to help bring that down. If you come into an extra $200 or an extra $300 within the course of a month, then throw that down or request that money to be added to the principal of the debt. And if you keep doing that, you'll see your debt go down smaller and smaller and smaller. Another way to pay down a debt is called the velocity banking method, and I'm going to be explaining that one in another video. Essentially, it's where you leverage your line of credit or your credit card to be able to tackle a larger debt. So just to give you a brief example of how that works, say you have a say you have a line of credit that's $10,000, and you wanted to tackle, say, your car payment because you pay $500 a month for your car, and your car, let's just say the regular payment is $500 a month for your car. At the end of 12 months of 6 years, at the end of 12 months, that's going to be $6,000, right? So 500 times 12 is $6,000. What if instead of paying only $6,000 to principal and interest, you were able to pay an extra, say, $4,000 on top of that $6,000 for a total of $10,000, but that $4,000 is going specifically to principal. What you would do is you would take $4,000 off of your line of credit, and then you would just drop it on the car and ask for it to be put towards your principal. And that $4,000, you divide that by 12, and you make that extra payment onto your line of credit. You're paying back your line of credit over the course of 12 months. So you're paying yourself, right? So you're allowing that payment, you're allowing $1 to be used twice, essentially. So you've taken the money from your line of credit, you've thrown it at one other debt, and then you are paying yourself back into the line of credit with larger payments in addition to your regular minimum payment of that particular debt. So you're making your regular whatever payments you would to your line of credit. And in doing that, we do it a different way. So if you get a paycheck, you drop your paycheck into your line of credit, and then you pay everything else out from that. But without getting into too much detail, that's just sort of a quick bird's eye view of how that kind of works. And I hope you found this video helpful, talking about something different as opposed to your traditional, let's get at these creditors, let's get at these collection agencies, let's get at these debts that you have that you're accumulating. Hopefully, if you have any questions or concerns, please feel free to send me a message, type them in the comment box. And as always, I have my mailing list that you can join. The link will be in the description section, as well as if you need to get in contact with me for any reason, I'll have a way that you can contact me if you need to consult with me. All right. Thanks again for watching. My name's Ryan Hamer, and it's to your success.